Anybody who has dealt with the Iranians will tell you it is often 2 steps forward, 3 steps back. They're incredibly slippery. They can't be trusted. We're not waiting. We're not trusting. We are reducing their capabilities. Their military is in shambles. Their missile program is in shambles. And now, hopefully, diplomatically, they will do it the easy way rather than the hard way of finally giving up on this illegal ambition.
The Iranian hardliners are back in control in Tehran, claiming to reclose the Strait of Hormuz. So are peace talks falling apart, or is this just the last gasp of an expiring regime? Welcome to the Big Money Show. I'm Brian Brenberg, along with my co-hosts Taylor Riggs, Lou Bassanese, Jackie DeAngelis, and with us for the hour, Rosecliff founder and managing partner Mike Murphy. Good to see you, sir.
Happy to be here.
All right. The IRGC playing spoiler after Iran's pragmatists appeared to agree to peace terms. The ceasefire between the U.S. and Iran is set to expire tomorrow night. Wall Street not panicking. Oil up a bit and stocks holding steady after a big recovery last week. All right, Mike Murphy, you are Mr. Sunshine. You always see the positives.
Let's go.
Friday was a little more positive, I would say, than today, but maybe you haven't lost hope. Tell us how you see things.
Tough to lose hope. Here comes the sunshine.
All right.
We had a great rally to where we're back in the green for the year, and we're in a better place with the situation in Iran than we were 6 or 8 weeks ago. The price of oil has come back down, but in the backdrop of all that is that when you look at our economy here, things are good to very good. Corporate earnings are very good to great. So the situation in Iran, they weren't going to just go away quietly. It's a terrorist regime. I think you couldn't have mapped it out better for where we are right now. We're in the best position we can be in. Hopefully, for their sake, they cut a deal. If they don't, I think the president has a plan to deal with them. And we're going to come back to, at some point next week, next month, we're going to come back to the focus on the U.S. markets, on corporate earnings, and they're pretty good.
Taylor, I woke up this morning, thought I was going to see pre-market way down. I thought it was going to be kind of a bloodshed day in the market.
I know.
Not happening.
Very well-behaved market for reasons that you cited. Let me start with some superlatives. So Friday, we had a 13th straight day of gains for the Nasdaq, the longest winning streak since 1992. If today ends up being positive for tech, and it likely won't, it would be the longest winning streak, 14 days since 1987. That is showing you that this is a very well-behaved, resilient market, and it is impressive. There are a few good things underway. I think some of the recent rally has been some of that short covering. So the good news is we can kind of get back to fundamentals. If there is good news and we see gains, that's good. If there is some negative news and you see losses, that's okay, because here's why. First quarter earnings, to Mike's point, have been very strong. Brian, we've had about 10% of the S&P 500 so far. 86% are beating on the top line. 90% are beating on the bottom line. Earnings growth is still expected to be 17% this year. So far, we've had 30% earnings growth year over year, very strong. That number likely will come down because we've only had 10% reporting, and the number will normalize. But again, 17% earnings growth, really strong. Plus, we're starting to get some of those refunds from tariffs. Today, I think, is the first day where we're starting to get disbursements. Let's watch and see how companies start to book that on their balance sheet. Finally, I'll just wrap it up and say, I think oil is the most, I know we talk about equities, we talk about bonds. I am floored by oil being so strong, and we're looking at Jackie here. Back when Russia invaded Ukraine, the 6-month Brent futures were still over $100 a barrel. So 4 years ago, when that happened, people thought this is going to be a long out, drag out fight. Right now, the 6-month is about $80 a barrel. Lou, correct me if I'm wrong. This shows that the market really is seeing this as a short-lived, in a market that can live through or get through this moment. So I guess, to me, very encouraging what I continue to see in these oil markets.
Yeah. Jackie, I read this headline in the Wall Street Journal this morning. Big oil plows billions into far-flung drilling sites to escape Iran turmoil. That's really interesting.
Drill, baby, drill.
Yeah.
I mean, that has been the mantra since the president came into office. Just to speak to Taylor, what you were talking about with Russia, Ukraine, and remember, that was described to us as supposed to be a very quick war, supposed to not not end up in huge conflict. We were just supposed to hand over money and hand over arms to the Ukrainians, and they were in a great position to take Vladimir Putin out. It is 4 years later, and that is still going on. That's why, to the point you're making, the confidence that this market has in Donald Trump, and when he speaks last week, he said this is essentially over, right? We might have 2 steps forward, 2 steps back. The market believes him, and I think the equities are showing that today. And even the spike in oil is pretty muted, given the fact that they're saying that Iranians now are playing games in the Strait again. I think what happened here is after the initial attack by Israel and also the United States, they took out that top rung of leadership, and the expectation was there would be a lot more disorganization amidst the ranks, and that I think this regime would fall faster than it did. I've been surprised at how organized they have been at their lower levels. But that's not to say that the situation is perfect, because they're still very fragmented. And I think what's happening here is you have certain people claiming to be in charge. They'll agree to terms that the president sets forth. And then all of a sudden, a leader of another area will say, well, how could you agree to that? We're not agreeing to that. And the whole system gets upended. And that's the challenge in trying to negotiate through something like this. But if anybody can handle it, I think it's the president. Now, what particularly struck me this weekend on the Sunday shows, Senator Tim Kaine was on, and he kept pounding the point that under JCPOA, we had a deal where the Iranians were not going to make nuclear weapons anymore. Well, maybe that's what they signed on the dotted line, but they did not adhere to that. As a matter of fact, that's how the enriched uranium has gotten to the point that it's gotten, where it's one step away from a nuclear weapon. They didn't want to agree or allow it to, have people come inspect and make sure that they were sticking to the agreement. Therefore, the president moved out. I hate this Democrat narrative that Trump just pulled out of that deal willy-nilly for no particular reason. Everything was fine, and this is a war of choice. It's got to stop.
Right. Lou, I agree with what Jackie's saying there. I'm more sunshine like Murphy in terms of where things. But I will say this as well. News out of Venezuela is pretty good. Chevron making a deal. It sounds like we've got more expectations to get more oil out of Venezuela. But the IRGC is increasingly not looking like it is going to produce any Delcy Rodriguez's. Does that give you pause that maybe Iran's going to be a heck of a lot more difficult going forward than Venezuela's?
I think the price action is telling, so put me in the Mike Murphy and the KC Sunshine Band group here, because I think it's going to be rosier on the other side. And before I answer your question directly, I'm going to ignore it for a second to touch on what we talked about Ukraine. The difference here, we have to remember, key difference then, we were coming off 2 negative quarters of GDP growth in 2022. The economy was dealing with inflation that was running at about 6.5%. So it was much more of a shock to the economic situation.
And we weren't drilling.
Right, and we weren't drilling. So fast forward to today, and Mike said it best, and Taylor too, we're growing at double-digit earnings growth rates. Multiples have compressed. You saw tech go from 40 times earnings down to 20 times forward earnings. That's a 50% contraction.
That was Jackie's NVIDIA call.
Yeah, great. So getting back, so now let's look at Venezuela, right? We always said Chevron would be the beneficiary because they were the one that was still there. They still had a 25% interest. No one else wants to play ball there. They want to drill in other areas where they have more control. And I think the positive is that oil prices, if we look at the futures curve, are still higher as we go out. We're about in the mid-70s 6 months out.
Good.
We're going to stay there. That encourages U.S. domestic producers to keep drilling. Break-evens in the Permian right now on new wells are about 69 or 70 a barrel. So you're going to see right now this preference for American oil, for fossil fuels. And in the next quarter to two, I believe you'll see the oil and gas companies come out and say, look, we're doing a lot more expansion. They've been sitting on their hands right now and just returning the cash to shareholders, which is not a bad thing if you own the energy sector. But I think you're going to see more of this energy independence. The U.S. dominance on the energy scene is a positive. Even if Iran tries to be stubborn, we're blockading the Strait of Hormuz. They're cutting themselves off.
It seems to be working. But, Mike, we're getting messages, too, almost on a daily or weekly basis now. Hey, this is happening. No, it's not. This is open. Now it's closed. That happens 1 or 2 times. Maybe it's fine. It happens repeatedly. Do markets start getting more nervous? Do traders start getting more nervous? Do people say, I can't believe what I'm hearing, I'm only going to believe what I'm seeing? And does that make the road ahead a little rockier than even you think it might be?
I think under normal conditions, it may. But what this administration's doing so well is they're handling the messaging themselves. We got the live video from the ship that was about to fire on the Iranian tanker. So they're not leaving it up to the mainstream media to say what's going on. So they're coming out, getting in front of it, saying what they're going to do, when they're doing it. So no one said like, hey, Iran said this, so everything's going to be sunshine. It's going to work perfectly. They're at the table with Iran. But I think the message we're getting is if there's no deal, we are going to handle our business either way. I think that's why the markets aren't pricing in a long, drawn-out conflict or something that could be negative. This is going to get dealt with one way or the other. So the markets are looking past it.
I think the same way the markets are looking past the China trade deal, right? We're getting to the table. Eventually, it's going to happen. Yep. They're seeing, markets are forward-looking, and you look at the price action, I think, in oil. I think it's always telling.
At a certain point, all of that, whether it's dealing with the Iran situation or China, is rooted in fear and not really knowing what's going to happen. And I know the markets don't like uncertainty, but to Taylor's point, when you focus on what is happening here at home, the benefits of the big, beautiful bill, the economic cycle that, Trump's economic policies have put into place that are starting to finally show us some reward, it's hard not to say it's right in front of you. It's right here. You can't focus on it because you have to be scared.
All right, Taylor, Eli Lilly. What's going on?
When Lou Bassney sits next to me, I know he's a fan of Eli Lilly, and I like to do it. And no, today it is not about GLP-1s, you guys. They are acquiring Colonia Therapeutics, a deal worth as much as $7 billion. I think up front it's $3.25 billion of cash, and then some other payments get made that makes the deal up to $7 billion if there are certain milestones that are reached. It is, I think, focusing on blood cancer, Lou, but you'll correct me if I'm wrong. And it's been a lucrative business for them. And so, again, a deal that maybe shareholders like. Curious how you think about this.
No, I love this. I said early on that we're going to see a ton of M&A in the big biotech sector because Big Pharma has $170 billion or $180 billion worth of pipeline drugs to replace between now and 2030. This is a great acquisition. Like you said, it's focusing on blood cancers, multiple myeloma, which used to be a best-selling drug for Celgene back in the day. Also getting into autoimmune and other cancers that are hard to treat.
Amazing. All right, coming up, new kids on the block are setting the tone. Palantir just laid it all out for the rest of Silicon Valley. It's America first. We'll show you what the company said next.